Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.
Hi, and welcome to StockInvest.us podcast for week 45. In this week's podcast, you will learn that Ocugen is finally out of the high-risk portfolio after an amazing 96% gain. It was sold last week at $17.10. Last week's trading tips, Under Armour did very well. Also that was sold, 14.1% profit. You will also learn that the analysis of the major companies were not all that right, but Bitcoin is, as I predicted, right now traded at $66,000. So how will it be? Will it continue upwards? Will it continue downwards? We will shortly have a look. But before that, we will, as usual, look about the market ahead of us, the week ahead of us. Remember now, Nasdaq is up for 5 weeks in a row. Will this continue? What are the chances? What are the odds? Last week's title was While We Are Waiting, because I'm waiting for this fall, which I think is inevitable. It will come. But exactly when will it come? My name is Jim. I'm one of the co-founders of StockInvest.us, and for the next 30 minutes, I will guide you through this podcast where we will do the market. We will look at some of the major shares, including Dogecoin and Bitcoin, of course. Then I will give you a trading tip of the week. And finally, we will look at my high-risk portfolio, which we've been following for so many weeks. But very first will be the market. We are heading into week 45, and also this week there will be a lot of quarter results coming. It's quarter season, as we call it, and you like to keep an eye on that because you do not want to be taken by surprise. Very often we see some movements just before quarter results, and especially on the quarter result day when they announce the quarter results. This happened to Under Armour last week, which was one of the trading tips. I bought it on Monday, and on Tuesday they released their numbers, and that made Under Armour move quite fast upwards. We will get back to that a little bit later. At StockInvest.us, we try to help you with this. If we have the data, we publish a yellow box next to the ticker. You just go to your ticker page, Microsoft, Tesla, whatever you're trading. And if you have the quarter results date, we publish a yellow box counting down until the release day, so you can be aware of which day it actually releases the quarter results. That's a good tips. Don't be taken by surprise, because you might wonder, why did the stock move so much today? And it was just due to the quarter results. Anyway, we are well into week 45, and it's the 5th week in a row that Nasdaq is doing good, being green. Markets, actually, Dow Jones also been green for 5 weeks in a row now. Last week, the title of the podcast was While We're Waiting. And as I told you, this may just continue upwards. And it is when things are overbought, they might just continue to push overbought. And now we know that even more money will flow into the market. But let's look at the actual numbers. Nasdaq closing very close to 16,000 points, 15,971, up 305%. Huge gain there, 473 points for Nasdaq last week. Dow Jones, 1.42%, up 500 points, ending the week at 36,328 points. So good weeks in the markets. Of course, it was some of the major companies pulling all this. Some individual smaller stocks did also very well. It was a few heavy days for penny stocks, I noticed. And in general, it was just a good week. But I've been saying now for 2 weeks that we are heading into red territory. It's just if and when. The thing is, as Nasdaq goes up, like now it will push to the 16,000 limit. Once it breaks 16,000, it may very well go just to 17. You heard me say this over and over again. You cannot tell exactly. And on the good side, there will be more support down. But looking at lots of charts, things are way too overbought. And if you go to some media sources, could be Finance, Bloomberg, Bloomberg, CNN, whatever newsletter you go to, you will see more and more people warning about a huge correction coming. I even today read a little article where one famous guy said that, well, there will be this major correction and a depression afterwards due to inflation. And I've been mentioning inflation over and over again. You have to keep an eye on this. But the fun fact is, last week, 10-year Treasury yield actually fell 7.59% to 145. So investors, for some reason, maybe it was due to the package released last week, think that the interest rates will not go up, that this inflation will be tamed. But it will not be tamed, it will just continue upwards. And for us that follows the market closely, we notice in every single price indicator, they are just moving upwards. And when you push more money into the market, well, it should just continue even faster upwards. So as I see it, there is no chance that we cannot avoid extreme cost levels around Christmas. It might be that it will return more back to normal after New Year, but before that we will head into some very strange events, in my opinion. I will not be surprised if we see some heavy titles in a month or two about the true cost of inflation, because this is really starting to hurt people. I'm not where you're sitting in the world if you are, because I have listeners all across the world. But especially if you're sitting in the United States, you should notice that your gas bill for sure has increased. And now I read Norwegian newspaper, being a Norwegian myself, living in Lithuania. I follow Norway and different countries very closely. And sugar, for instance, have increased more than 50%. And now all shops are saying that, okay, the food prices have to go up. And slowly, bit by bit, they will increase it. So you will notice on all, it's not about sugar only, it's all kind of food items. You will just see prices continue upwards. I haven't checked the burger index lately. Usually you can do that. You can check the burger index and see the cost of a burger, because it's one of these funny indexes we use to track differences between countries in different price levels and also the general inflation. Oil up $2, ending at $82 this week. Holding stable, as we know, Biden went out and begged OPEC to increase production. Oil has been moving up, and as I said, I believe oil will be 100 before Christmas. I still stick to that, even though we know that the United States is pushing hard to make OPEC produce more oil. But I don't think that will, even though they start some production now, increase production a little bit more. We are going into a colder season across huge parts of the world, and this should affect oil consumption. And unless the COVID, of course, put the world back down again, things should just continue as production also start to increase. We have to get back to the level where we produce enough items to keep inflation under control, and there is this logistics problems, which I also mentioned. And gold is $1,817, up $33 from last week. And as I said, gold 2,000 before Christmas. That was my guess many months ago. I still stick to that, and I stick to the idea that gold in a year ahead of us will be 2,500. Gold will be safe haven and where you want to be invested. Usually I tend to say a little bit about the signals, the buy and sell signals at StockInvest. We track more than 35,000 tickers across the world right now. And all in all, there is 24 of them. 24% of them is giving a buy signal. It is somewhat okay, not particularly high. If you look at Nasdaq, we see Nasdaq is moving up from last week. Last week was 26. By the end of the week, it was 30% buy signals. New York Stock Exchange is getting very high again. It's 41. Last time New York Stock Exchange had a huge fall. It went all the way up to 47, and then the markets had these very dreadful days where it fell very hard over 2-3 weeks. So we are heading to that territory again. London is 28% buy signal. So still huge chance that things can continue upwards, but at the same time we are getting to these levels where everything should start to fall. Will it be this week? Well, we can look quickly at the Nasdaq chart. You can do this yourself. Go to StockInvest.us, type in the ticker Exig or Nasdaq, and you will get the chart. And it's a good thing to do, to keep an eye on it, and you will understand so much more what I'm talking about. Because if we look at the chart now, we can see that it's heavily overbought. Relative strength index just measure how many days the stock or the index or whatever it is moving up compared to down. And when it goes above a certain level, usually this level is defined depend on volatility. In the Nasdaq's case, it's if above 75, it's overbought. If below 25, it's oversold. And now it's been overbought 5 days in a row. So there is a correction coming. I have to repeat myself again. It can, of course, just continue. But with the relative strength index at 89, what are the odds that this week will be good? In my opinion, it's absolutely zero, but I've been taken by surprise before. I made my mistakes before. But in my opinion, we're heading for $15,400. We should have some huge falls in the few days ahead of us. Natural correction in the market could be that, of course. Elon Musk saying, well, I might sell 10% of Tesla. What do you think? Give your vote on Twitter and I will decide if I sell 10% of Tesla. What do you think happen if Elon Musk starts pushing 10%? Oh, well, we will see if that will be the one key that pushes the market down, if you have to blame something. But in my opinion, there is no way that we can continue upwards, even though we know that above 16,000 things can just go even more crazy. But 90%, it's such a long time since I've seen this. Last time I saw it, it ended very badly. Just to give you a short example, it was 83 back in September, 15,300, fell straight down to 14,200. Heavily down there, as you can see, 1,000 points over 2-3 weeks. And we are heading just to the same territory now. It should get back at least to 15,200, but in my opinion, we are talking somewhere between 15,400, 16,100 this week is the range of movement, in my opinion, ending actually at 15,000. I will keep a guess that it will end at 15,400 by the week. So I look at the week, which in my opinion has to be read. Last week, while we're waiting, title this week will be that it will be read. I will figure out the exact title of this week's podcast, but for sure I am pretty sure that the market will be read. So that is the prediction for the week ahead of us. We will head into red markets. You have to position yourself to do whatever you feel is comfortable for your portfolio. We can see that the volume is increasing a little bit, which is somewhat okay, but as I said, it's way too overbought now. And that also brings me a little bit back to the portfolio, which I will mention in the end of this podcast. This high risk portfolio, Ocugen, was sold, as I said, at $17.10 last week, giving 96% profit. I have not added a new ticker into that portfolio because I think the market risk is way too high. And again, if you have followed me long enough, you know that I haven't bought any new shares as I'm selling out the high risk portfolio stock as we go to reduce the risk. I've done the same thing in my overall exposure. It still continued down. Now I'm way below 40% exposure into the market. I was 100 a long time ago, and ever since market get higher, I have reduced my exposure. Anyway, we will now get straight into the analysis of the week. We will have a quick look at Apple, Microsoft, Bitcoin and Dogecoin and Tesla. Last week I told you I believe Apple would end the week at $145. But Apple ending the week at $151.28, doing a little bit better than expected. And if you look at the chart for the week ahead of us, we can say that the relative strength index is falling. The stock is moving upwards. A buy signal from short-term moving average, long-term moving average, from the relation between these two averages. Only a little resistance above, all the way up to 156. Above 156, it will meet resistance from previous top and also from the trend, the top of the trend. Volume is following the stock, I would say somewhat okay. Usually this indicates that the stock should be able to push a few days more up before falling down. The very good support around 148, 150 give an idea that there has to be a very red market day for the stock to fall very fast. Last week I thought that would happen, that it would break through all these levels, bounce up around 144, back up to 145. This week, given all the support around 148, 150 doesn't seem that likely. To me, it looked more like the low can be around 146 and the high can be around 154, moving somewhere between these two levels, 146 and 154. Relative strength index is, as I said, going downwards. Too early to say if this will be enough to trigger the fall, but last time we saw the similar situation going from a high position to lower position was back in September, around September 5th, 6th, when Apple was at $156.69. From that point, it fell down to $139. We see somewhat the same tendencies now coming up towards the previous high, already way too high on the relative strength index, but with that good support below, there is like very little chance that will be a very scary scenario where it drops very fast. So I expect a more moderate fall all over the week, slowly bit by bit, going a little bit downwards, and the bouncing maybe up by the end of the week. Either that or we'll start the week a little green, first 2 days green, then red, hard to say exactly. Last week the target was 145. I'm not sure that will be it this week, so I'll actually increase the target a little bit and say that I believe on Friday Apple will be at 146. But as you can hear, I keep being slightly negative to Apple. Heading just to Microsoft. You can type in the ticker Microsoft, you will see the chart, you will see the same thing that I see. And if you look at Microsoft, you can see I told you not sure, 7, 8, 9 weeks ago that Microsoft was in way better shape than Apple. And Microsoft done so good. Last week it pushed all the way up to $336. My target, I was expecting a correction because it was already overbought. With the idea that it could just continue upwards, but I was actually expecting a fall last week. Didn't happen. I actually missed the target by $22, so that was the second week in a row where I made a huge mistake in the prediction of Microsoft. So if I just keep my low target, I will probably be right this week, because like Nasdaq, it is insanely overbought. It was topping at 90 on the relative strength index. It's extremely seldom big stocks like this go this high, and now it should fall back. Some support around 320, later 330, later 320, then 310. And last week I had a target of 312. I think we are heading for a brutal week for Microsoft. Despite having a buy signals from the short-term moving average, the long-term moving average, the relation between these two averages, the volume is going in the opposite direction of the price. It's already in the upper part of the trend. So by all logic, the stock should now fall. So this is what I think will happen in Microsoft during the week. It will start maybe somewhat sideways, then have a quick fall down to $324, bounce a little around 324, then straight down to $310, and pulling the market as well. Sometimes it's very good trying to see how this will play out in the chart, and that usually, in my opinion, so we're looking at Wednesday, somewhere where things will get really bad. But again, as I said, also for the index, when things are overbought, they can just continue upwards. You really have no guarantee, because the market is not rational at all. It's just pushing higher. There is no reason why Microsoft should have this evaluation right now, but market don't care. And if you already are in Microsoft, as we will know when we get to Tesla after Microsoft, and I've been into Tesla, I will tell you about this trailing stop loss, etc. So if you are in Microsoft, well, you will just run a trailing stop loss, enjoy the fun as long as it lasts. It might go to 350, who knows? I might be very wrong. I was wrong 2 weeks in a row now. Might be the third week I'm wrong, but in my opinion, it will be down to 310. Might bounce a little bit up. I will keep my target for $312 for Microsoft. And we will see if that happens, if that turns into a very good buying opportunity. It has for sure lot support between $300 and $310. But my guess is Microsoft will have a much more brutal week than Apple this week. And that brings us to Tesla. And as you know, I also got into Tesla when Tesla was 560, and I told you this one will just continue to 8,900. And at 8,900, I will start looking at the option to sell. It slowly, bit by bit, worked its way all the way up to 8,900. Struggled a little bit by 8,900, but then breaking 900, it went into overbought, just like Microsoft, and in crazy moves, it moving up all the way to 1,220. I am expecting a correction, but as I said, you can just wind back to my previous podcast, the podcast before that. When things get overbought, it might just continue. And Tesla being $1,222 right now, well, it can continue just to 1,500. Why not? This is Tesla. There is no logic to anything. The PE ratio is just insane. But it's up to the market. It's not up to us to decide. Volume is struggling a little bit to keep pace with things. And Elon tweeted that I might sell 10%. Just give me your votes. And as far as I know, there were more votes for him selling than not selling. So it might just be that he will try to unload 10% of his shares, as Tesla is at all-time high, and he will rake in some heavy billions for sure. Anyway, for the week ahead of us, I see the same pattern as I see in Microsoft. There is very little support downwards. It moved very fast from 1,100 to 1,200, and normally when then things go backwards and there is no support, things can get ugly quickly fast. Will not be very, very surprised if it gets very ugly. Last week I had a target of 950, which was way off. Good support around 1,000. So like Microsoft, I will increase my target a little bit. I will say 1,050, believing that Tesla will fall to 1,050. And as I also said, I have Tesla. So when Tesla went up to 8,900, I started something called a trailing stop loss in Tesla, because I'm expecting these will be the levels where the stock will finally move back, have a natural correction. I was so certain about this first move, these very, very nice percentages from 560 to 800, some 50-60%. At 800, I put on trailing stop loss, and I'm just running the fun as long as it lasts. I thought it would be sold last week with a huge dip or something. It didn't, so I'm still in. But I can tell you, I am very, very close to being triggered by trailing stop loss. If you don't know what trailing stop loss is, read up about it. It's just a setting that some serious brokers, and you should use a serious broker, offer you, where the stop loss always follow the stock upwards. And just to give you an idea, because Tesla is such a volatile stock, I actually have a 10% trailing stop loss on Tesla, and tweaking a little if needed. But I see that we are getting very close to be cut off, a small cut. And you may say, well, 10%, that is really a much. But you have to take in consideration the volatility, and you have to remember, I have been in since 560. I already doubled my money, even more than that. So I will be in green no matter what happens. If I lose a few percent on the very, very top, it doesn't matter to me. I have secured my profit. Summarize Tesla. I expect it will be a red week for Tesla. I expect it to fall. It will bounce a little up and down, hit 1200, bounce maybe up, then back to 1100, maybe 1120 or something, bounce a little up. Could fall straight to 1000 in some very red day, then bounce a little up. I expect it to end at 1050 by the end of the week. Hopefully, if you're a Tesla investor, I'm wrong and you are right. But that's how I see it. If Tesla now gets back to 800, that might pose a very good buying opportunity. Even 1000, we have to see how the market in general move and if it's sustainable to keep pushing upwards. And that brings us to the crypto, Bitcoin. And I might have been wrong about the stocks over the last 2 weeks, but I've been spot on with the crypto. And as I told you, the Bitcoin will go to 75,000. It's not a question if, it's just a question of when. And right now it's pushing upwards. It comes from a very, very nice position. We like everything we see. It's moving sideways around 60 to 65,000. Exactly that kind of situation you want, where it's able to start build up momentum. Coming from a very low ROC position at 43, moving upwards, you have plenty of space. Next up now will be 75,000. Last week I said to you, I believe Bitcoin would end the week at 66,000. If we look at Friday's price, it was 62,000. Right now it's 66,000. So you can arrest me on that if you want. It's 66 now, but we usually use Friday's number, which was 62. So I will give you my tip for the week ahead of us. And I think if we go 1 week ahead, and we can use Friday prices since we always use Friday's prices, I believe we will see Bitcoin at 75,000. And I have this little gut feeling that we might actually end up in a rally to the 100K. I am not a crypto fan at all. I just follow it. And I have crypto myself, Bitcoin and Dogecoin. But I'm not bitten by that real crypto like so many are. But it's for sure a place, I think, as I also said last podcast before, if market takes a fall, I still believe crypto can do good or at least better than the markets. So it's not such a bad place to be. All in all, nothing negative to say. There is plenty of support below, and it gets more and more as it moves like it did last week between 60 and 65. It builds up the support level, and now being 66 has all this support from 60 all the way to 64,000, make it more likely that it will continue up than continue down. And if you go 4 or 5 podcasts back, I told you that it might dip from 50 to 45, which it did. Now this scenario is not so likely, simply because there is so much support below. But if it falls below 60, don't be surprised if it falls to 55 and even 50. 50 will be the bottom of the rising trend. You can check out the chart for yourself. And any correction within the trend is more or less normal. But there is nothing, absolutely nothing in the chart indicating that right now. Especially since relative strength index is coming from a good position. Volume was low, and I think that it will increase now and just push, as I said, Bitcoin to $75,000. And then there is this fun Dogecoin, and as you know, I told you that when Dogecoin was above 30, I would consider to sell and rebuy possibly somewhere around 24, 26 cents, which I actually did. I got in at 26 again, and I expect that again we will see a push upwards, and I believe it will be a very nice push as well. So this small trading in Dogecoin is actually starting to do very good. Last week I thought it would be above 30 again, but it didn't manage during the week. It was floating around 26, 27 all week, and it's somewhere around the same today. But if we compare the chart, we compare the Bitcoin chart, we compare the Dogecoin chart, and we see many similarities, but we can also tell that Dogecoin is held a little bit back. So I believe there is plenty of upside in Dogecoin. I believe, I'm very certain that we are heading for 40 cents again. It's like Bitcoin. It is not if, it's just when. Last week my target was 34 cents. I will just keep it. I think it will continue upwards to 30. And as you know, the first buy was at 20. Sold with more than 50%. Now we're back in at 26. Now we'll do another maybe 50% on also this trade. We will see. So these were the analysis of the week. If you for some reason have a very special stock that you want me to analyze, of course you can send me an email at jim@StockInvest.us or just enter our help desk system and send me a message. The support team will forward it to me. For the very last part of the portfolio, we will look at the trading tips. And last week was Under Armour, one of them, doing a quick little rally, banking 14.7%. So last part of the portfolio will be trading tips. Of this podcast will be trading tips and my portfolio. Last week's trading tips was Catalent and Under Armour. And as I told you, I wanted to buy them as cheap as possible on Monday's opening. Or during the day, trying to find a good entry position. And I was able to buy a Catalent at 138.55. It was not the very low, but it was not that bad either. Everything was seeming very good for the Catalent trade. It went just above 140, 142.50. I was running a trailing stop loss of 5%. That was I considered the volatility of Catalent. But last part of the week, Catalent actually started to turn down. And at 133.6, my trade was cut with a loss of 3.57%. And that is exactly the reason why you use stop loss. So I had to go red on the Catalent trend. The other trade I did was Under Armour. I was doing the same thing as Catalent. I was looking at a good entry point. I got in at $19.05 for Under Armour. I was hoping to get 18 something, but as I told you in the podcast, it might just be hard, and it was hard to get in. I got in at 19.05. Under Armour did just very well, pushing upwards, but the same thing like Catalent happened. At the end of the week, it started to fall. Actually, Under Armour went as high as $23. Running a trailing stop loss also in Under Armour caused it to be sold at 21.85, giving me a 14.7%. So for these two trades, I made more than 10% profit. It was indeed overall very good. You cannot win them all. And since I started giving you these trading tips, we have done, let me count, have we done 8, 10, 15 trading tips. And from these 15, we have sold 5 with losses. Just to repeat them quickly, we sold SQ with minus 3.77, Cadiz minus 4.45, Nevro minus 3.23, and Cadiz again, second attempting Cadiz with minus 4.44%, and then CTL Catalent this week with minus 3.57%. So as you can hear, all of them were sold around, let's say 4% loss. And this is because they push, I use something called trailing stop loss, so it just follows the stock upwards and always uses the highest for it. It's very good because, as I told in all these podcasts for more than 1.5 years now, what we at StockInvest try to do is increase your gains, reduce your losses. It's super trading tips: increase your gains, reduce your losses. Using trailing stop loss or stop loss, at least have a strategy enables you to cut your losses. And as you can see, my losses are at 4%. So what about the gains? Well, we can start with Nvidia. Nvidia was sold with 13.45%. Roku was sold with 5.75%. Coin only 2.32%, Zynga only 0.23%, but AMC 22.16%, Moderna 18.45%, Excel Energy 4.45% profit, GameStop 8.89% profit, and now Under Armour 14.7% profit. So maybe you're able to see the pattern here. My gains are doing very well. My losses are few. Actually, I have closed 9 trades in profit. One was sold just Diffusion in and out, 55 cents, didn't move the way it was supposed to. It was sold at the same, unchanged. What about this week? Which stock is it I think can do good? Actually, I will do a trade in Ocugen. And not to confuse you, I have this portfolio which we've been calling my high risk portfolio. And in this portfolio, I had Ocugen. I got Ocugen into portfolio at 872. Been very steady on this trade, keeping it because I knew it would go the right way. Huge volatility, moving up and down. It was down at 6.7 at some point, but last week or last 2 weeks, it's really starting to push upwards. And last week, it went very high. Doing a trailing stop loss, etc., because as I told you, I might go out of Ocugen on this run. So it was sold at $17.1 $17.1, giving me 96.10%. If you look at the chart, Ocugen chart, you will see around 10, it faces a lot of support. And that actually happened. Ocugen went into this rally and then fell brutally. I was out from the high-risk portfolio. But seeing Ocugen at 10, looking at the chart, makes me believe that there is an upside for a rebound in Ocugen. Not sure if it will be only 10% or if it will be 20 or 30%. My guess is around 30% for sure. So I am actually, in this week's trading tips, I will only give you one trading tips, but I am looking to get into Ocugen around 10. It's a very risky trade because it's such a volatile stock. Moving so fast. If you have too tight stop loss, you will just get cut short. If you have too wide, of course, you stand to lose a little bit. So this is a little tougher gamble than what I usually do, but I will try the pickup game in Ocugen and see if I get in around 10, hoping actually to be getting out around $13, having 30% profit. But I will be happy with anything. If it gets 5-10%, I will already be very close on the trigger to get out because this is, as I said, a volatile stock. And as for the short-term trading tips, it's not something I will get stuck in. And as I said, I'm reducing my exposure and it's out of my high-risk portfolio. It will not get in as is. So trading tips of the week will be try to do a short clip in Ocugen. Will I be able to make money? Who knows? You will know next week when the results are there because I cannot manage to see it will stay for all week. It might just be a few hours trade, could be a few days trade, just in and out, and it may be one of these where we have to take a loss again. We will see. But Ocugen is the trading tips of the week. And that brings me to the very final part of this week's podcast, the high-risk portfolio. And it's getting very few stocks left into them. It's only Diffusion, NEO, PGS, that Norwegian oil company, oil survey company, and Abus, and of course Velocity Energy. It's only these 5 stocks. At one point there were more than 10 of them, but they've been out. Autos was sold 94% profit, XPEV 7% profit, Energy 95% profit. Last week, Ocugen with 96% profit. As I just told you, bought 8.72, sold 17.1, so it's out. We are in some losses as well. Diffusion Pharmaceuticals have not moved as expected. At one point, it was more than 150% up. It was a bad move not getting out. Sometimes even I do mistakes. It stays in the portfolio, but right now running at minus. It's only 45 cents now. I always had this hope for Diffusion Pharmaceuticals to start push some solid news. Being in the midst of this COVID pandemic, they working with oxygen transport in the blood, super product, super time, but they have not been able to do anything. I should have stick to the technical picture instead of the fundamental picture, because they have really not performed. Will they be able to perform? Hardly to say. We're getting to the end of COVID. Pfizer released medicines, as you might know. And there are a lot of these medicines that actually turn out to work. So I think that we are at least getting close to the end. And I'm not sure if Diffusion Pharmaceutical will be able to utilize this situation. It is what it is. It's a super penny stock. It will stay in portfolio longer. Given all the super gains I had in this portfolio, I can stand a huge loss in Diffusion Pharmaceuticals without losing my sleep. NEO 42.29 up 10% last week. I think it will just continue upwards. It will stay in the portfolio. Petrogeo Service was up at 470, back to 360. I have huge belief in this stock. Struggles a little bit with high debt. So it's a little driven by fundamental facts, this heavy load of debt. We'll see how they handle it. At the same time, due to high oil prices, they see increased activity, and given exactly that, the high oil price and the increasing level, the demand for oil is as high as we know, I think that they will see good flow on contracts forward for the multi-library, Geo library, and I think it will be a good trade. Have to warn you, some Norwegian investors says that this one will go down to $1 because of 1 Norwegian kroner due to the debt level. But I think that is just an attempt to push the stock down. Technically, it looks quite okay. It's moving in a horizontal movement right now, and it actually needs to get above 450 to see some real traction. Will it happen this week? I don't know. We will see. We keep it in the portfolio as is. Arbutus, which were doing good last week, up at 428, had a huge fall, 10% last week, ending at 348. But Arbutus is also one of these companies that I like. It's biotech. I believe in biotech because we are in the pandemic, and biotech was my choice even before the pandemic, because they are in a position where they release more and more things, cancer medicines and everything. And HPV is the thing that Albus is big on, and it's a huge worldwide problem. And I think that their products is exactly what is needed. So it's not only a technical trade, it's a fundamental trade in Arbutus. It stays in the portfolio. We will see when it will be so. Diffusion Pharmaceuticals, Arbutus, PGS, etc., they have been hammered somewhat already. And if we get into red days, they might actually do the opposite, do somewhat good, being picked up. The last stock in this portfolio is Velocity Energy, is this pink stock which I bought, this lottery ticket which I told you about, and at some point it was just moving crazy up and down. But for weeks and weeks, it's been totally dead. That's the life of pink stock. With Nasdaq being as high as this, it might be that it start moves this week. Who will know? But it might be that I will be stuck with this for a long time. So that's it. Over weeks and months, we've been following the portfolio, getting out some huge profits. And now it's only just a few stocks left. As I told you in the very beginning of this podcast, I believe markets will head for a downfall. I will not increase my high-risk portfolio. I have several portfolios. This is just a high-risk portfolio. I have an old portfolio doing extremely well and a few others. But the high-risk portfolio, it's time to leverage down, not up. So I'm slowly getting out of my positions. And eventually I will close it. I will open a new portfolio that we can follow in this podcast. And that is the end, my friends. Finally, we are getting there. It's time to do other things than just talking into the microphone. Anyway, I hope you will have a good week. I hope you will be able to increase your gains, reduce your losses. Take my word for it, stop loss really works. It hurts sometimes because you will see your stock being sold just to bounce very hard up. But human nature is like this. We sit in the losses until they are so bad that we lose our sleep over it. And when we finally sell, they bounce up. And usually if you start checking your charts, you will see that the chart actually told you it would bounce up because volume got to extremely low. It is in the end or the bottom of the trend at support or something. It's such a typical move to sell exactly when it bounces up. You want to be ahead of these things. You want to change your way of thinking a little bit, your way of trading. Use strategy, write down some good strategy rules. Google the internet for good trading strategies. The best that I know is use stop loss. Have a very good reason. Why do you buy this share? What is the exact reason? Is it just because they say I'm ready to buy it? Is that a valid reason? Maybe, I don't know. Find a strategy that works for you. And by everything, above everything else, try to enjoy. It is fall. We are getting closer to Christmas. There is more to it than stock trading. Have a nice week.